Visa's stock is at an all-time high, yet many super investors are still buying at these record prices. Why? Is it simply a safe bet, unlikely to lose money? Or is there still room for growth for this incredible company? In this video, we will use our 7-step analysis process to uncover why Visa remains such an attractive investment, even at its peak, and what the future might hold for this exceptional business. Visa is one of the leading players in the world of digital payments. It enables people and businesses to transfer money through its powerful network known as VisaNet. Visa processes transactions in over 200 countries. In 2022 alone, it handled approximately 242 billion payments worth around $13 trillion. So let's start with a quick look at the history of this stock. If you invested $1,000 in this company 10 years ago, you bought 16 shares. And today, they would be worth something close to $4,912. And this company also pays dividends, so in that time you would get $179 as dividends. So if we add together the current value of shares and the dividends, we get $5,091, and that is a gain of 409% in 10 years. Considering how secure this investment is thanks to Visa's market position, such a return is really great. So let's see who benefited from those results. Individual insiders, that is an X, less than 0.1% of the company is owned by individual insiders. So unfortunately, the management does not have its skin in the game. And are individual insiders buying? That is an X. There are actually a lot of sale transactions recently. And the super investors own this company. That is a check with 25 super investors. It is the 5th most owned stock by them. And we see many great investors in this group, people like Chuck Ackrey, Terry Smith, or Francois Rochon. And are super investors buying right now? That is a check. They bought 4.6 million shares and sold just under 3 million shares last quarter. So let's try to find out why so many of them are buying shares of a company when its stock is at an all-time high. Return on invested capital, that is a check at 21.4% 10-year median returns. And we want to see this number higher than 10%, so that shows that the management is doing a really nice job. And what do we know about net profit margin? It is a check averaging 51.9% over 5 years, and the sector median is 22%. What is also worth pointing out is that Visa has the highest margin in the entire industry. And now let's take a look at share buyback. It is a check. In the last 10 years, they bought back 20.7% of shares. So long-term investors own a bigger portion of the company without investing any extra cash. And the debt? It is also a check. It would take just over a year to pay the long-term debt with a current free cash flow. So that is definitely not a problem for Visa. Well, it is checks all around. I think it's pretty obvious that this is a great company. But financial health is only a part of the story. We want our companies to be strong, but we also want them to grow. Revenue growth, that is a check at 11% 10-year compound annual growth rate. And we would like to see this number higher than 10%, so they just made it. Free cash flow growth, that is also a check at 10.9% in the last 10 years. Pretty close as well. And earnings per share growth, that is another check at 16.2% in the last 10 years. Well, earnings per share are higher than other metrics because of share repurchases. If there are less shares, each of them represents a bigger portion of the earnings. But there is another way to create value for shareholders besides buybacks. The dividend yield is 0.7%, so shareholders can expect to get $2.36 annually per every share. That is not a very high yield, but let's see, is this dividend secure? For that, let's look at the payout ratio. That is a check at 21.4%, and we want to see the payout ratio somewhere between 20 and 50%. Because what it means is that they are paying 21% of earnings as dividends. So we get a decent part of the earnings, but at the same time, almost 80% stays in the company and can be used for many things, including growing the company. And what do we know about dividend growth? It is a check at 15.4% 5-year growth rate. So that is very impressive. And actually, the dividend is growing every year for the last 16 years. That looks really nice. So we know how strong this company is, how fast it is growing, and what dividends we can expect. But no business is worth an infinite price. So let's value Visa. Price to earnings ratio is 30.9. That is a lot. We have to pay over $30 for every dollar this company earns. But such a simplified valuation method can be sometimes misleading. That is why, to calculate the intrinsic value of this company, we will use a discounted cash flow analysis. And if you want to learn how to value companies on your own using the 4 most popular models, visit stockinvesting.academy and explore our company valuation course. Okay, so first we have to estimate the growth of Visa for the next 10 years. So in the low scenario, we will estimate a growth of 9% for the first 5 years, and then 8%, in the medium 11%, and then 10%, and in the high scenario 13%, and then 12% growth. So the low scenario is close to the predicted growth of the industry, which is 9.2%. Medium is showing a story in which Visa continues to grow at a similar pace it did in the last decade, and the high one is predicting that it will have some good years ahead and very slightly accelerate its growth. So with such estimates, the intrinsic value in the low scenario is $186, in the medium $216, and in the high scenario $251. But we have to always apply a margin of safety to those prices. I use a 30% one. And with such a margin, we get in the low scenario $130, in the medium $151, and in the high one $176. And the current price is around $307. So it is all in the red. Visa is really expensive right now. So let's put everything into perspective and try to understand why, even though it is clearly an expensive stock, super investors are still buying. Well, Visa has definitely a great financial health, and its dominant market position makes it a very secure investment. On the other hand, it is expensive, but at least we know what we are paying for. It maybe too much, but it is a quality company. So let's open our Stock Ranking Pro, which you can get access to by becoming a Patreon, and compare Visa to some of its peers. And let's start with the overview. Straight away we see that it is just the most beautiful company we can imagine. Everything about Visa looks really, really good. So let's sort all the companies in our ranking by the overall score. And we see that Visa is the third best company we ever analyzed on this channel. But that's not all. To really understand how strong and secure this company is, let's open it and go down to the company history. Revenue, very nice and stable growth. Free cash flow, few bumps along the way, but the trend is very positive. Earnings per share, also a stable, consistent growth. And finally, dividends that are steadily growing. So I believe that the main reasons that Visa is so attractive for super investors, even at those high prices, is that it is a very predictable company that just grows over time with the world's economy. It is very unlikely that anybody will be able to disrupt this growth in the coming years. So we are paying not only for the quality, but also the security of such an investment. Thanks for watching and see you in the next one.